In this presentation, we will enter cash outflows from our business and personal accounts, entering the outflows from our bank statements, outflows related to credit card payments, payments for college tuitions and costs, and payments for the telephone for January into QuickBooks. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in QuickBooks. We currently have the home page open. We've got the open windows open. You can open the open windows by selecting the view dropdown and the open windows list. We're going to now go to our check register by selecting the banking dropdown and going to use register. We're going to be in our checking account and continue entering data. Where we are down here on the My College, this is going to be where we are entering data from our bank statement. We've entered information so far for the deposits, for then withdrawals up to this point. These are all going to be considered electronic withdrawals and no check numbers in this case. If they had check numbers, if we had a bank statement where we were writing a lot of checks, same kind of detail, although then we would have to include, or we should include, the check number as we enter into. We got both business and personal included in this checking account. We're making payments for business and personal. We're going to move here to the college, and this is going to be a personal. Now it's red here because we're going to say that this is going to be an item that we may want to track for tax purposes, and therefore may want to think about our personal tax grouping to put it in such a way that it'll be easy for us to then create or give to our tax preparer. So we'll go back into QuickBooks, and this happened on the 12th. This is going to be E for an electronic transfer. I'm just going to put My College, generic name for the college we're going to. It's going to be a vendor and setting up 900. And now we need to set up a new account because this is a personal expense. We'll set it up as college costs. So we're going to put college costs, which will include the tuition, which we're assuming this is, and it will include things like books and whatnot. It may not include, we may not want to put things like purchases of meals or something in the college costs, unless we think those are going to be deductible too. We're going to try to put the things in here that we think might be useful for tax preparation. That's the grouping or the logic behind this grouping, and not breaking out just book purchases versus college costs. So that's going to be the idea, but again, it could change depending on what your needs are. And we're going to say set up and expense. And then we're going to say splits because we want to put this into the personal category. So in the classes, personal, the default will be the business. This is personal, so we'll select personal. Next item, we're going to go back over here. Back to our bank statement is where over here is, and cross that out or highlight it. Now we're going to have the bookstore. So we're going to go to the bookstore, and we made payments to the bookstore for the college as well. So for the bookstore happened on the 12th as well. It's going to be an E for electronic payment. We're going to call it bookstore. This is a generic name, of course, for My College. And quick add that vendor, that's who we bought from, $100. And again, I'm not going to break out the bookstore. We're just going to put it into My College, or the college costs, because we think that both of those grouped together might be something that we could then give the detailed report for taxes, and we can print the report including both of those costs within it if that is indeed the case. Then we need to say split and go to the classes and assign the class of personal. Entering that information, next item is going to be the credit card. Now the credit card's a bit tricky because there's a couple different ways we could deal with that. We're on a cash basis system, so in this case we're just paying the credit card. So we're just paying off the credit card. We could just enter this in. We'll take a look at a few different methods here. Let's take a look as we go instead of rambling on. So we'll go to the 15th and we'll say E. And this is going to be credit card. Now we might want to name the credit card if it was American Express or Visa, whatnot. And we might want to put, say, the credit card number in there if it's the last 4 digits of it to differentiate if we have multiple credit cards. If we only have one, then it'll be fairly easy for us to know who the credit card is. And then we're going to say this is what we paid. Now that's not, of course, necessarily what we charged. Now the problem is that this is the credit card by definition is not an accrual of cash basis account. If we want to put the balance of the credit card in there, that's a liability because we bought something we didn't pay for it yet. So now how are we going to deal with that? One way, we could just set up an account called credit card and then just have the expense account. And that will, if we did that, it would be easy for us to reconcile and easy for us to then go back and say, okay, if I want to look at the detail, I can go back to the credit card statement. But it's not, we don't get as much detail in doing that, and we're not going to record the stuff that we didn't pay for yet. In other words, if we didn't pay for the entire balance of the credit card, we haven't included that. So the other method is that we enter this into the credit card account first and then write the check. And then we're going to do like kind of the in-between method right now using the splits function, and we'll discuss more about credit cards at a later time. First, note that we are going to be using a January credit card for our example. It would probably be better to be using a December credit card that we paid in January, but in this case we're looking at the detail for January thus far, and then we're paying it in January as well. So bear with us with that detail, but note that if we look at the credit card statement, we'd have to go to the credit card statement in order to enter the detail for it. We couldn't just go to the bank statement unless we just use credit card. So if we go to the credit card statement related to the payment we're making, then we would see if there was no prior balance, it would be 0 and then the additions and then any payments and then the ending balance. That's what we're going to assume happened now. Now in the second month, we'll have a beginning balance, and we'll show that by not paying the full balance here. And then we'll have the detail, which in this case was Ralph's, Chevron, and Starbucks. So that's what we have to enter, Ralph's, Chevron, and Starbucks. But note that that adds up to $385, and we only paid 100 of it. So keep that in mind as we go. So we're going to go back over here into our QuickBooks, and we're going to say split now. And we're going to use the split function not just to assign the class, but also to break out these accounts. So the first one's Ralph's. I'm just going to call that groceries. So we'll say we got groceries, and we're going to set that up. This is going to be an expense account. It will be personal. And say okay, and that's going to be for 310. And then the memo, I'm going to put who did we buy from? Ralph's. So now this will break out the correct expense account to the correct account, but it's not going to give us the detail by vendor, so we can't really look at the vendor reports. So that's why this method is going to be kind of in between. It'll be a quicker method to use. It'll allow us to enter it directly into the check register, which is nice. But it doesn't give us as much detail in terms of the dates, the actual dates, and it doesn't give us the detail in terms of the vendors if I wanted to run a report by vendor. So the next item, we're going to say that this is going to be personal, and then we had Chevron was the next item on our credit card statement. So if we look at our credit card statement, Chevron 60. So we'll say Chevron. And that's, let's say just gas, let's say auto gas. We're going to put up a new account. So we're going to say it's auto and gas. Now we could put we could emphasize some other component, but we're going to emphasize that it's an auto expense and then gas. We'll say tab. We're going to set that up. Going to be an expense type of account. The amount will be $60. And then we could put Chevron in the memo. And then we'll say that's going to be personal in terms of the class as well. And then the last one we had here was, what was the last one? Starbucks 15. So then we'll go into Starbucks. That's going to be coffee. We could say Starbucks individually to break out, but I'm just going to put it into coffee. And so we'll break out coffee as a different, we could put it into restaurants. We could put it into bars and other entertainment or nightlife or whatever. Or we might want to break out our coffee, which might be useful for many people. Then we spend a lot of money on coffee. So I'm just going to call it coffee shop. And again, if I spent a lot of money at Starbucks in particular, I might want to just make another one for Starbucks just so I can track what I spend there. And that might be useful for some reasons. We're going to say that set that up. It's going to be an expense account. Save it. And then the amount was for 15 memo Starbucks. Personal account. So I'm going to say personal. We could start to type this in here, personal, and then tab. So that's what we have. Now we have a balance here, and we're going to have to put that balance somewhere or it won't let us record this transaction. I'm going to call the balance credit card payable. And of course, I'm going to select tab, set that up. This is going to have to be not an expense, and we shouldn't put it as an expense, but as an other current liability. This is what we're going to owe in the future. So I'm going to put other current liability and save. So that's going to be our other current liability. That's what's due. And of course, that's going to be the 100 minus the credit card statement balance of 385. We owe 385. We only paid 100. We have a balance of the 285. So that's going to be our information. We could put personal there as well, just to finish this whole thing out. And so that's going to be our first account that we're kind of deviating away from a complete cash basis in an attempt to give us better, more accurate detail. So we're going to say save and close, and yes. See what else we got here. So there's the credit card. Next one we're going to say is Safe Insurance Company. We're going to say that's a business expense. That's why it's green. It's going to be a business expense. So we'll go back over here into QuickBooks, and that happened on the 15th. And we're going to say Safe Insurance Company. We'll have to set that up. New vendor, tab, quick add, vendor. It's going to be for 600. Then we need to select an account. Because it's business related, I'm going to see if I can find one in the chart of accounts given by QuickBooks. So we'll select the chart of accounts. We're looking for some type of insurance. I'm just going to select the general insurance expense. And that's it. We don't need anything else because the default class will be unclassified. Next item, we've got that one, is AT&T. So AT&T phone company. And we're going to say that's the business phone company, and that's on the 16th. So it's going to be EAT, and we're going to say and T. Not sure exactly if that's the correct spacing, but we'll keep that. And that's going to be 410. And again, this is business, so I'm going to choose the business account that QuickBooks has given us, telephone expense, and enter. And so the next one we have here, there's AT&T child care, and this might be daycare or something like that, or it might be preschool. I made it red because we're thinking that this might be something we might want to track for taxes. It might be something that we might be able to get some type of tax benefit for. So we'll go back over to QuickBooks, and we're going to say this is on the 17th. This is E's child care, tab, quick add, vendor. It's going to be for 125, and then we need the new account. It's going to be personal. We'll set up an account called child care costs. Child care costs and tab. We're going to set that up. It's going to be an expense. That's correct. Save it. Then we're going to split once again and go to the classes and have it be a personal class. And record and save. So now we're going to go to the 17th, and we have the next item. We're going to cross this one out. Jimmy No Name. So we're going to go back over here. So it's kind of a random payment. So it looks like a personal payment for something to Jimmy. So we're going to say Jimmy No Name, and tab, quick add, vendor, 200. So now again, we don't know what we wrote that check possibly for, or something that's not going to be a repeat check that we see all the time, or something like that. So we might want to put it then in. We could put it into a Jimmy expense account, personal account, or to whatever it's related to. Or if we don't know, we might want to put it into something like miscellaneous. So we'll put that into miscellaneous, and tab. We're gonna set it up. And we're going to say it's a miscellaneous account and save it and enter. Okay. We also should have set up the class up there. So I'm going to go back up top. Here it is. Split. And then we'll set the class up to personal. And then record it again. All right. Next item. We're going to go back to QuickBooks. We're going to say, or back to our bank statement. Highlight that. We have the Edison Electric. That's going to be our business electric. So we're going to go back over here to QuickBooks. That happened on the 17th as well. E, we're going to say Edison Electric. Tab, quick add, vendor, $598. And this one's a business expense, so we should be able to find it here. I'm going to select the drop down. We're going to go up and we're looking for the Edison Entertainment. That's going to be utilities typically. So we'll find utilities and enter. We don't need a class at this time. Next one, we'll just do a couple more here. We're going to say Edison Netflix. So that's going to be an entertainment, personal typically. So we're going to go Netflix on the 23rd. We're going to say E, Netflix. Tab, enter, vendor. Doing this a little faster now, 20. Now, Netflix we might want to put into just entertainment or something like cable or something like that. But I'm going to put it into an account called Netflix because I'd like to track how much we spend on Netflix specifically. So tab. And Netflix is, of course, a type of watching, kind of like cable, internet cable, I guess. Save and close, and enter. So that's, and note, Netflix, we should have added a class. So let's go to the splits, class, and say personal. Now, if we miss that, that's okay because we'll go to the statements later and be able to find that pretty easily if it was in the wrong class or no class. So there's Netflix, and then we've got the cable company. So we'll go back over here, and we're going to say this is on the 23rd. This is going to be E. This is going to be the cable company. Tab, set that up. Vendor, it's going to be for 48. And then we could set this up something like Netflix and cable similar, or we might have the internet set up separate from the cable and call it internet. I'm just going to call it cable. So that's going to be our cable cost. Tab, set that up. It's going to be a cable expense. That's the one. And then we'll go to split. We'll add the class being personal, and enter. And then we're going to go back to our statement, and now we've got Verizon. Verizon is going to be the telephone. Now that's going to be the personal telephone that we have. So if we go back to our file, we're going to say that this Verizon happened on the 23rd. E for electronic transfer, Verizon is who we paid, a telephone company. And we're going to quick add vendor. It's going to be for $83. And this time we do have a telephone expense, but I would like to say personal telephone. What I'd like to do is differentiate between the personal and the business. We could put it in the same and differentiate with classes, but that could cause a problem. So we're going to say tab, set up, save, and then I'll go to splits, classes, personal, record. Now if we missed anything or didn't assign a class, we'll be able to find that fairly easy once we reconcile and go through the reports. Let's take a quick look at the reports now. Reports drop down. We're going to go to the company and financial, profit and loss by class. Changing the dates from 01/01/20 to 12/31/20. So here's what we have so far: personal and unclassified. The unclassified being the business. Everything else we assigned to a class. You can see that if anything, like if Amazon or if cable was in unclassified, we can easily reassign it to the proper class by just double clicking on it, and we can tell basically by the accounts. Note with something like the telephone, you might have said, well, we could just break this out by class, meaning instead of having a personal telephone and the business, I could just say every time I pay Verizon or the business account or the personal account, I break it out into personal, and every time I pay AT&T or the business account, I break it out in business. And we can do that, but also note that if we had the same telephone company, it's a little bit more difficult for us to see that differentiation. So if we do it this way, we're breaking it out by a whole separate account and by classes, which gives us an easier view, a little bit more information in our report, which could be more burdensome, but easier view to see if something is out of class, misplaced, and put it in the proper place once seen. For more accounting information and accounting courses, visit our website at accountinginstruction.info.